Imagine waking up tomorrow and realizing your bills were already paid. Not by working overtime, not by side hustling, but because money you invested months or years ago is now quietly paying you every single month. Think that's a dream? Well, keep watching because that's the promise of dividends and it can be your reality. But here's the catch. While you've probably heard people talk about living off dividends, the reality is most explanations are either too simplified, just buy dividend stocks and you'll be rich, or way too complicated, buried under jargon about covered calls, yield on cost, or payout ratios. So today, I want to break this down in plain English. We're going to look at how you can actually create a reliable dividend income stream, what it really takes to replace a paycheck, how much money you'd need to invest, the risks nobody tells you about, and whether it's even possible to live fully off dividends in today's economy. By the end of this video, you'll not only understand the math, but you'll know the strategies, the pitfalls, and the mindset you need if you want to pull this off. So grab a coffee, because this is going to change the way you think about money. First, let's make sure we're on the same page. A dividend is simply a portion of a company's profits that they pay back to shareholders. If you own a stock that pays a dividend, you're essentially getting a slice of the profits just for holding onto your shares. Think of it like this. Imagine you own a small coffee shop, and every month it makes a profit after paying wages, rent, and all the bills. If you decide to take part of that profit home, that's your dividend. The difference is that in the stock market, you don't have to run the coffee shop. You can own one tiny slice of Apple or Coca-Cola or Procter & Gamble, and as long as they keep making profits, they'll cut you in on the deal. Sounds easy, right? But here's where most people get it wrong. They hear about dividends, get excited, and think they can retire next year. The truth is, living off dividends is possible, but it's a lot more nuanced than just buying a few shares and sitting back. Let's talk about the dream. I want to live off dividends. What does that actually mean? Usually, it means replacing your living expenses with money that comes in from your investments. Let's put some numbers on it. Suppose you need $3,000 per month to cover your expenses: rent or mortgage, food, insurance, car payments, maybe a little left over for fun. That's $36,000 per year. Now, let's say you invest in a group of companies or funds that pay a 4% dividend yield. 4% doesn't sound like much, but in the world of dividends, that's fairly average for solid, stable companies. To make $36,000 per year at a 4% yield, you'd need $900,000 invested. And that's where a lot of people's jaws drop. $900,000? For most people, that's almost unreachable. But before you click away, stay with me, because there are ways to accelerate this, strategies to reduce the amount of capital you need, and importantly, context for why even a smaller dividend income can change your financial life. There are basically two paths here: the fast lane and the safe lane. The safe lane is what most traditional investors talk about. You buy dividend-paying companies with long track records. Think Johnson & Johnson, Procter & Gamble, Pepsi. These pay maybe 2 to 3% yields, but they're rock solid and they usually grow dividends over time. This is the tortoise strategy. It works, but it takes decades to build up enough capital. Then there's the fast lane. This involves higher yield investments, certain ETFs, real estate investment trusts or REITs, or covered call funds that can pay 7, 8, and sometimes more than 10% annually. Suddenly, instead of needing $900,000 invested, you might only need $400,000 or $500,000 to hit that same $36,000 a year target. Sounds amazing, right? But here's the catch. High yield usually comes with high risk. Those payouts can be cut in downturns, the share price can fall, or the strategy might not perform as expected. Let's bring this down to earth with an example. Real estate investment trusts or REITs are companies that own and operate real estate, like office buildings, apartments, or shopping centers. By law, they have to pay out at least 90% of their taxable income as dividends. That's why REITs often have juicy yields into the double digits. Then you've got covered call ETFs. These are funds that own a basket of stocks, but also sell call options on those stocks to generate extra income. The result? Yields of 8% or even 10%. But remember, the extra yield comes from giving up some of the stock's growth potential. Yes, you collect the option premium, but if the stock rises rapidly, you may have to sell it to the option holder at the strike price, which can be below current values. You have upside, but it's capped. So if you're looking for immediate income, these kinds of funds can be game changers. But if you're looking for long-term compounding wealth, you need to mix in growth-oriented dividend stocks too. So the real art is in balancing these two lanes. You want stability, but you also want income. Now, why do dividends feel so magical compared to just selling shares? It's psychological. When you sell stock to generate income, you're reducing your ownership. When you get dividends, you're getting paid without touching your shares. It feels sustainable, like the money is truly passive. And here's the kicker. In many cases, dividends are sustainable as long as the companies stay profitable. But you always have to ask, is the dividend covered by earnings? Is it growing? Is it consistent? Those are the clues that separate solid dividend income from shaky promises. So let's talk dividend reinvestment, or DRIP, because it is an important point. While you're growing your portfolio, you want to reinvest your dividends, not spend them. Another beauty of the dividend is that when it is reinvested, it buys more shares that in turn pay more dividends. A self-enforcing flywheel of future income payments. Now let's address the elephant in the room, the risks. Dividend investing is often sold as this safe, easy path to financial freedom, but the reality is more complicated. Dividends can be cut. Companies slash dividends all the time when profits fall. Just ask people who invested in airlines or energy companies before downturns. The stock price can fall. If you're chasing a 10% yield but the stock drops 30%, your net worth just took a hit even if the dividend keeps paying. And inflation is a killer. If your dividends pay the same dollar amount year after year, but inflation rises 3% or more, your real income is shrinking. That's why dividend growth, not just dividend yield, is critical. So what's the practical takeaway? You don't need $900,000 tomorrow, you need a plan. Step 1 is to start building your dividend portfolio alongside your regular investments. Even if you're starting with just a few $100s, reinvesting dividends compounds incredibly fast. Step 2 is to diversify. Don't put everything into one high-yield ETF or one REIT. Blend stable dividend growers with some higher-yield plays. Step 3 is to decide your timeline. If you're 25, you've got decades for compounding. If you're 55 and trying to retire in 5 years, you need a more income-heavy mix. And step 4, be realistic. Even an extra $500 a month in dividends can be life-changing. That's groceries, a car payment, or part of your rent covered forever. Here's the real beauty. Dividends aren't just about income, they're about freedom. They give you more control over your time, more security in your retirement, and more peace of mind in knowing that your money is working for you 24/7. Yes, it takes capital. Yes, it takes patience. But so does anything worth having. And the earlier you start, the faster you'll get there. So, is it possible to live entirely off dividends? Absolutely. But it's not overnight. It's not a get-rich-quick scheme. It's a journey of building, balancing, and compounding. If you got value out of this breakdown, hit that like button. It really helps the channel. And if you want more deep dives like this every week, don't forget to subscribe and ring the bell so you never miss a video. And hey, drop a comment below. How much monthly income would you need from dividends to feel financially free? Until next time, keep investing, stay disciplined, and let your money start working harder than you do.